Salesforce just completely rewired the global financial standard. Q4 closed with total revenue hitting a massive $11.2 billion, locking in a relentless 12% growth rate. Breaking down the revenue engines, the Agentforce 360 platform and Slack combination delivered a colossal $2.7 billion. Agentforce service raked in $2.5 billion, and Agentforce sales locked down $2.3 billion. Look at how ruthlessly they extract value. Gross profit stands like a titan at $8.7 billion. By suffocating operating expenses at exactly $6.8 billion, they secured a clean $1.9 billion in pure net income. The ultimate catalyst triggering this earthquake? Non-GAAP EPS skyrocketed to $3.81, utterly obliterating the $3.05 consensus. This cash machine is operating at absolute perfection. Diving deep into the structural trends, we are witnessing a generational shift in cash flow. Across the timeline, traditional professional services have completely flatlined, showing a microscopic compound annual growth rate of just 1.4%. In brutal contrast, the explosive momentum is entirely concentrated in the subscription and support ecosystem, printing an 11.8% CAGR. This massive trend is spearheaded by the platform, Slack, and other segments surging in 18.4% CAGR, blowing past the integration and analytics segment at 11.9%, while sales and service hover around the 10% mark. The charts are telling a definitive story. Enterprise clients are no longer paying for human software configuration. They are violently pivoting their budgets into core automation platforms. The beating heart of this massive acceleration is the Agentic Enterprise architecture. This is a highly sophisticated, four-tiered ecosystem. The engagement layer positions Slack as the ultimate communication nexus. The agency layer unleashes Agentforce customer and employee agents acting as the decisive brains. They tap directly into the customer 360 system of work to autonomously execute enterprise operations. But the most terrifying weapon is the unlimited connectivity in the data 360 context layer. This architecture connects directly with infrastructure titans like AWUs and Snowflake, syncs with core systems from SAP, Oracle, and Workday, and is injected with raw intelligence from OpenAI, Anthropic, and Gemini. Everything is hermetically sealed inside the Einstein Trust Layer, engineering an autonomous workflow network the world has never seen. This new structure has completely obliterated the old rules of value measurement. The software industry is abandoning the archaic per seat metric and aggressively pivoting to outcome-based pricing through Agentic Work Units, or AWUs. The growth trajectory is absolutely phenomenal. In Q4 alone, the system executed 771 million autonomous tasks, translating to a blistering 57% sequential acceleration. Zooming out, Salesforce has delivered a staggering 2.4 billion AWUs for live customer agents all time, processing a monumental 19 trillion tokens. They are mathematically proving their ability to convert raw, unstructured data into actionable, monetizable results. To maintain absolute precision across billions of tasks, their data engine just devoured 112 trillion records, maintaining an explosive 114% growth rate. The zero-copy technology is displaying absolute dominance with a 310% surge, directly analyzing 53 trillion records at the source without any duplication. The massive $8 billion acquisition of Informatica immediately amplified this power, helping the Service Cloud alone trigger 129 million AWUs. However, brutal macro risks are circling. In the SMB segment, HubSpot is rapidly expanding its empire with 228,000 customers, directly threatening Salesforce's 150,000 base. Furthermore, a massive pricing paradigm crisis is brewing, as tech executives deeply question whether AWU volume actually guarantees a return on investment, or if it is just hallucinating AI executing useless tasks that inflate enterprise costs. Stepping into fiscal year 2027, the strategic battlefield is polarizing violently. Salesforce is conquering the front office workflows, while SAP and Oracle are completely locking down the back-office supply chains. The market momentum is terrifying, with enterprise AI adoption surging 282%. With 30% of tech budgets now being aggressively routed into agent integration, Salesforce instantly secured 29,000 Agentforce contracts, growing 50% sequentially. Facing a massive fragmentation crisis where companies juggle an average of 13 AI agents with 51% operating in complete isolation, Salesforce's unified architecture is the ultimate remedy. Crucially, when a European Union's AI Act enforces its brutal standards by the critical deadline in August 2026, the Einstein Trust Layer will execute data masking and audit trails. This massive compliance burden accidentally engineered an invincible economic moat that will completely suffocate smaller competitors. Hidden behind this flashy tech is a story of militant financial discipline. Instead of burning cash for growth, Salesforce's cost structure has been compressed to an incredible degree. Over a prolonged cycle, sales and marketing expenses maintained a microscopic compound annual growth rate of just 3.8%, capping at $4 billion in Q4. The research and development budget was strictly controlled at a 5.9% CAGR, hitting $1.6 billion, while general and administrative costs locked in a 5.3% CAGR at a mere $0.9 billion. Suffocating this expense growth kept total operating costs firmly at $6.8 billion, acting as the primary rocket fuel that launched profit margins to historic milestones. This ruthless cost discipline engineered an invincible profit leverage trajectory. Looking at the net income margin curve, we are witnessing a monumental turnaround. Starting from a 0% margin in the early stages of fiscal year 23, the trajectory continuously expanded, hitting a 20% apex in Q3, before locking in a solid 17% in Q4 alongside a massive $1.9 billion in pure net income. This picture confirms the absolute death of the growth at all costs era. Salesforce is now hyper-focused on cash flow quality, permanently converting its market dominance into highly sustainable, sequential profitability. The ability to sustain growth momentum is the ultimate anchor for institutional capital. The reported actuals consistently track and completely shatter the projection lines. This quarter, the $11.2 billion actual revenue successfully defended the most aggressive Wall Street expectations. Exploiting the massive automation spending cycle, the future trend line is targeting even more colossal macroeconomic milestones. The estimates project an unstoppable, relentless expansion, aiming straight for a monumental $12.2 billion revenue target heading into Q4 of fiscal year 2027. The structural endurance of this revenue machine is absolutely undeniable. EPS is the ultimate, concentrated metric reflecting true financial health. Actual earnings per share this quarter hit $3.81, utterly flattening the market's $3.05 projection. Looking at the trend line, this is a phenomenal acceleration starting from the $1.69 mark in early fiscal 24. Based on current discounting models, the next long-term target is aiming for the $3.54 threshold by the end of fiscal 27, generating a colossal $14.4 billion in free cash flow. Salesforce commands a superior financial profile, cementing an absolute, unassailable advantage for the long haul. With a flawless cash machine executing at this magnitude, how is the financial elite pricing Salesforce? The consensus is absolutely overwhelming. Out of 50 major institutional analysts, a massive 36 are screaming buy or strong buy. Only a single analyst is daring to bet against this juggernaut with a sell rating. Looking at the valuation trajectory, the average institutional consensus sits firmly at $318.06. But the real euphoria lies in a maximum price target, projecting a massive expansion to the $375 mark. Wall Street is effectively declaring that the Agentic AI supercycle is ready to detonate. Please note, the views expressed in this video reflect opinions at the time of publication and do not constitute investment advice. Hit subscribe, smash the like button, and drop your own price targets in the comments. Will this Agentic AI pivot secure Salesforce's absolute dominance in the enterprise software space? Let me know.